Cool. Cool. We're just trying this out. It's the quality of YouTube has not been good. So give it a minute and we'll see if we can get more people on here. Hey, that's very cool, James. Very cool. Yeah, but we've really, James, we've really expanded things out. Our newsletter now has really become popular. The closing print, we've got the opening print newsletter that's just exploded, and it's really, really a cool way to keep up with kind of what I'm kind of thinking. I mean, I've always said that I'm not the brightest guy in the box when it comes to the economics of this stuff. Yeah, the exchange wanted to close the floor. It wasn't really COVID. I mean, COVID gave the floor and gave the exchange a reason to close. But anyways, I'm gonna I'm gonna start this. I put it up on Twitter, and for the guys that are on my channel on YouTube, I'm not sure if this is via the people that are coming on or from YouTube or if they're from Twitter, but I've got a pretty big Twitter following, and hopefully that more people come in. But anyways, I'm going to start talking a little bit. I don't understand. Oh wow, I see this. If I put the phone near my computer, it's trying to connect to the wireless, so I can't do that. Let's see if I can do it over here. Let's see. Okay. Anyways, I'm going to try and talk a little bit about what I think is going on, and I guarantee that I'm not going to be able to cover anything. And furthermore, I don't believe that anybody can cover everything with what's going on right now. But what I want to do is start out with a little bit of a story, and it's kind of bring me back to 1996 when I was doing business for Sheikh Mohammed in Dubai. And after being in and out of Dubai several times, and coming back to the United States, I really got to appreciate what was going on in the United States. But I also thought to myself that there was no way. I thought to myself, we live in a wonderland. I mean, as I started going to Dubai when I think there was 250,000 people, and I know that there's over a million and a half people now in Dubai, or even higher. And I kind of knew at the time that the United States was so far advanced than a lot of these other nations around the world that there's going to have to at some point be a little bit of a catch up. You know, you and I swear to God, on one trip after being there for over 3 weeks, I came back and I got down on the ground and I kissed the ground. I did. I was like, God, and then fast forward, we get through the credit crisis, and a lot of you guys don't know this, but during the flash crash, my trading operation took a $10 million loss. A hedge fund that was using our desk that had this big S&P option position on tried to unwind a spread in the middle of the flash crash. I think he was short the puts at like 50 cents, a dollar 50. And when he was quoting up the puts that he wanted to get out of the long side of the spread, they were 2,500 at 3,500. And by the close, had he not done anything, he would have only lost about 2.5 or 3% of the value of the hedge fund, which was like approximately $100 million. But that day when he did that, he blew up the whole hundred, and I think it was a $90 million fund, and the fund actually lost a hundred million, and that left the desk with a $10 million loss. So as good as my career was on the floor, I had to overcome that, and I did. In the future, what we'll do is I'll explain how I did that, and I'll tell you one thing: it was with the pit bull's help. But anyways, when we fast forward a little bit, I think we all know that the Federal Reserve was kicking the can down the road during the credit crisis with all its quantitative easing, and things have changed a lot since the credit crisis. I mean, the 666 low and the credit crisis lows, the S&P rallied over 650%, and during all that, there was the U.S. racked up, billions of dollars of debt when it was doing the quantitative easing, and we knew then that they were going to have a hard time paying it back. But now, under circumstances, they're racking up 10, 20 trillion dollars, and I think the U.S. Fed debt now is reaching almost close to 30 trillion. I don't have the exact numbers, but like I said, I knew something was going to have to change. I didn't know that we'd be kind of up against this new world order that they're talking about with North Korea, China, and Russia all kind of teaming up. And that's obviously advancing right now. And I don't think there's much of anything that the United States can do to stop that. But anyways, I wanted to talk about the banking crisis, and I'll be honest about this. There were few people on Twitter, and my handle on Twitter is at MrTopstep.com. And there were a few people on Twitter that even believed this when I started talking about the fact that we could be heading into another credit crisis. Well, yeah, it does have a lot to do with the Fed and zero rates, and then the Fed's approach to raise rates rapidly. Obviously, there, over the last couple of weeks with these banks, these regional banks going out of business or needing funding, it brings back all that old stuff that we always worried about, is that how can he control all these different banks, and especially the regional banks. And my own opinion on this, and again, I'm not probably the best to answer all these questions, is that when the Fed started all this recent stuff with propping up these regional banks, people would ask, why is it that they're going to bail out these banks? Well, they have to. I mean, they have no choice. But that said, the big thing that I think is out there is that these regional banks, they were all long bonds, right? That's really what happened. They were long bonds because they had to be. But the real problem isn't that they were long bonds. The real problem is that they had no way to hedge, or they didn't know how to hedge. Not like a Goldman Sachs or a JP Morgan or one of the big banks. They have hedging programs for this, and basically what they could have done very easily is just gone right into the CME, sold thousands of bonds to hedge their portfolios, and they wouldn't be in this situation. But they are, and there's not going to change. But the latest information is that there's 186 other regional banks that could potentially be in the same problem. And that in itself is going to be a gigantic thing. But the other part about this is that the big banks, if the Fed was to backstop, all the banks, it would be $20 trillion to backstop all the banks. And that's going to be impossible. Tomorrow, the Fed's going to be coming back out, and they're going to be talking about what they can do in interest rates, and are they going to raise, because of the way everybody rushed out of the market and went into the 2-year, and it kind of moved the yield curves around a little bit. And there, it's kind of made people think that the Fed's not going to raise rates. I disagree with that totally. I think the Fed has no option but to raise, and I don't think the markets are going to like it very much. I think according to the CME Fed funds, I don't know exactly what the percentage is, but there's a high percentage that the Fed will raise a quarter of a point tomorrow. The other thing about the the 2 trillion or the $20 trillion that we're talking about to backstop the U.S. banks is that they say that right now, according to their accounting that was done a couple of years ago, and before the bonds sold off, that they've lost 2 trillion in value. And I don't think that I just don't think that this is anywhere even close to being over. I think that there's much more to this than what we get to see. And really, again, what's happened is we just kind of get this stuff out of the clear blue. A headline comes out, and then all of a sudden, you hear about SVB, a bank that literally no one really, very few in the public had ever even heard of SVB. I mean, now all of a sudden it's front and center, and what could potentially be the beginning of another credit crisis. And another thing I want to talk about today is the Craftsman tool. Everybody's heard of Craftsman tool. They've been around since 1927. They announced today that they'll be shutting down their U.S. factory. And this is just one of a small example of what I think is a lot more to come in the future. I got a couple notes here on my trading cards, So I think what I'm kind of getting at is that in the end, I think what the most important part about this is that the markets have really taken a lot of wealth away from people that have retirement accounts and pension funds, right? I mean, and there's a lot more to the pension funds too. That the Bush administration bailed out a pension fund not too long ago, I think for $400 million, and then you have the real estate market, the commercial real estate market. So you have pension funds, you have the commercial real estate market, you have all sorts of different problems going on at once, and I don't think this is going to stop. But at the end of the day, the S&P right now is trading 40.11 quarter. It had a high today of 40.31 quarter, and it sold off down to the let's see, where did it sell off? I think it got down to the '06 level, 41.06 as we await the Fed. But my own opinion is that this is going to be a long, long, drawn out thing. I've always said that I didn't think that this was going to be a one and done thing. I think it's going to be a lot longer than maybe what the Federal Reserve expected it to be. PIMCO, yeah, PIMCO's fund went out. You're 100% right. I think that was 1.8 billion. And I think this is just the beginning of this. And I don't think that the public is really, really aware of all the different moving parts that are adding up. One of the things that I did say earlier, or at the end of last year, one of my predictions was that gold would go to 2,400. And I know that sounds absolutely crazy. I know it, and I just think that and all this risk on, risk off stuff, that you probably got to own some gold or silver or some ETFs or something like that. I don't have a suggestion for that, and I also think that while I'm not a big favor of cryptocurrency, that cryptocurrency, my guess at the end of last year was that crypto would go back to the 3,500 level, 35,000 level. And now I'm kind of thinking even higher. I'm not a big crypto fan. I think what happened there was really, really kind of the beginning of it's kind of like a domino effect, right? I mean, you see all these losses going on in cryptocurrencies, and there's billions and billions of losses, and one of the things that I really, really question is why are people so apt to want to take money, that good hard-earned money, and throw it into an unregulated product that you're never going to get your money back. I mean, when it goes, it disappears. It just goes away. It's going to be gone forever. And but in the long run, here's what I think about the S&P, and I'm going to be coming back on as we get a little bit better handle of how to use the live stream and how to kind of merge Twitter into that, because I do. A couple of videos I've done on Twitter recently had thousands and thousands of hits, and we're expanding Mr. Top Step. We're going to be doing trader funding. The Mr. Top Step trading forum has become really, really good, and I'm not here to sell you to get in. If you want any information on the Mr. Top Step Trading Forum, you can reach me at Danny at MrTopStep.com. I'd be happy to give you a free trial. And it's not very expensive. We have an indicator that is called the MIM, and we had it back on the days when I was on the floor talking about, hey, this is Danny Riley from the trading floor of the CME, and for today's closing print. And I still have that tape, and I can still do some of those videos. But the MIM, the Mr. Top Step and Balance Meter, provides data for the market on close orders or the 350 cash and balance, and we see that every day. And we also keep track of that. We've got historical data for the MOCs and balance, and it's really become one of Mr. Top Step's most popular products. How you use that is up to you. I know what's happening within the futures markets is that there's a lot less people trading futures. Obviously, it's become so overbuilt with algorithmic and high frequency trading. It's not even worth complaining about. It's just, my question would be real quick would be how did Citadel become the world's make more money in its hedge fund than any other hedge fund in the world? Well, Ken Griffin's no dummy. I mean, he's built up that hedge fund. He's moved down to Florida. He's got a place in West Palm Beach where he knocked down three $100 million mansions. He's building like a 50-foot, I think it's 50,000 square foot home, and he's opening his office in Miami. And the other part about West Palm Beach is now it's become what they call Wall Street South. And Tudor's down there. Everybody's down there. Everybody's moving down there. I mean, obviously, we know why. I mean, it's gotten to be pretty dangerous in these cities. And in my city alone, I live in Delray Beach, Florida. I moved out of Chicago about 10 years ago. The Magnificent Mile, Michigan Avenue in Chicago, 30% of the stores are closed. And I don't predict that these big cities are going to be, it's going to take years and years and years and years to rebuild these. And you walk on LaSalle Street during the day near the Board of Trade or the old CME, there's nobody on the street. I mean, maybe at lunchtime, but I don't know. And one of the things that I've always said is that the commercial real estate market's going to be in a lot of trouble. And I'm going to stay away from all the politics. I'm not interested in politics. I don't care about. I didn't really vote for either guy. But what I do see is that the United States is in decline, and we're going to have to really fight to stay on top of this in order to keep our monetary system in place. How this all unwinds, I don't know. I really don't. I think that there's a lot more to this than we don't know. The higher you raise interest rates, the more it hurts people that don't have a lot of money. You lower interest rates, you send a signal that the economy is doing better when inflation continues to increase. But at the same time, like I've always said, I'm not an economist. I don't pretend to be an economist. I'm a guy from the trading floor. I really did run the world's largest S&P index operation, according to CME statistics. And last but not least, the pit bull. I see the pit bull every day. The pit bull's alive and well, and he's trading, and he will tell you, and I would say the same thing, is that all the indicators that we used to use, all the little tools that we used to use, they don't work anymore. The put call ratios, they may work a little bit, but the VIX, I mean, look at the VIX. I don't even know where it's at today, but look at the trouble that the markets are in, and the VIX seems to show no fear at all. But anyways, I'm going to leave it like that, and I hope you guys are looking forward to this. We're going to have more guests come on. We may be doing a speaking event with a couple of guys, 3 or 4 guys from the Mr. Top Step crew at FAU and the economic department, and we're going to try to stream that live. I think it'll be a really good event. I mean, we've got some really great speakers, and I'm going to leave it like that. I just really wanted to come on and try to test YouTube and see if we could do this, and I believe we can. So you are going to see more of me, and you will see more of the guys from Mr. Top Step very soon. So take care, everybody. Danny at MrTopStep.com if you'd like a free trial to our forum, which I would tell you, I think it's one of the best in the business, and I'm not saying that because I own the company. I'm saying that because I know the people that are in there. Former guys from Wall Street, guys that ran hedge funds, prop traders, you name it, everybody's in there. So I hope to see you guys in there. And if not, we'll just keep, and don't hesitate to just email me if you've got some questions. Where do you post videos? Periscope's gone. Twitter got rid of Periscope, and that's too bad because they they got the connection for using like a cell phone when you're using live stream on Twitter. It's no good. It's just not good. There's the quality of the video is terrible. So we're going to move to YouTube, and we're going to start putting up a lot of different videos. And I hope to see you guys soon. So we're going to leave it like that. Have a good one, everybody.